Welcome to the Property Guide. You're watching ET Now, your one-stop destination for information on the Indian property market. If you have any feedback about the show or questions about buying a home, write to us on the email ID that's at the bottom of your screen. Now, we have a really exciting show lined up for you this week, so let's get straight to it. On the show, we'll start by comparing Navi Mumbai and Thane. We'll find out which of these two markets holds more promise as an investment destination. We'll also talk about these new schemes we have in the market right now, offering 80-20 or 70-30 possession-linked payments. We'll find out if there's a catch and if there's anything you should worry about. And in our legal segment, we'll give you a list of documents you should ask your builder for before you buy that home. All right, in the studio today, we have Om Ahuja, CEO of Residential Services at Jones Lang LaSalle, and Madhurima Basu, Director of Residential Services at Cushman & Wakefield. We're so glad to have both of you here. We've been receiving a lot of feedback from our viewers asking us which one of the two makes more sense, Navi Mumbai or Thane. So we decided to spend some time this week looking at these two hubs and comparing them. We'll weigh the pros and cons and tell you which one makes more sense. First, let me bring in Avan, who will give us an update on the prices in both locations. Avan.
Thanks for that, Faye. Now, specific pockets in the realty hubs of Navi Mumbai and Thane have witnessed a smart appreciation over the last 2 years. Let's start with Navi Mumbai. The homes in New Panvel are currently quoting at an average of 4,175 rupees per square foot compared to 2,900 rupees per square foot in 2012. Now, that's a whopping increase of 44% in just 2 years. Prices in Ulve, which is the location for the proposed airport, touched a peak of 7,614 rupees per square foot in 2012, rising 39% in just 1 year. However, after a dream run, the prices have dipped and the homes in this locality are currently priced at an average of 4,975 rupees per square foot. On the other end, the property prices in Gorbandar Road in Thane have risen by 32% in just 2 years. The homes here are currently priced at an average of 8,650 rupees per square foot. Homes in Pokhran Road are currently quoting at an average of 10,900 rupees per square foot, among the most expensive locations in Thane. Homes in Kolshet are currently quoting at an average of 9,500 rupees per square foot compared to 6,975 rupees per square foot, an increase of 36% in just 2 years. With that, it's back to you, Faye.
All right, Avan, thank you for all of that information. Om, let's start with this first. This is largely investors who are writing and some end users as well. And they're buying under construction projects at this point. They want to know, does it make sense when we're looking at Mumbai to consider Thane, which means you're looking at the Gorbandar Road area of it, or to consider maybe outskirts of Navi Mumbai, largely Panvel, what's being called New Panvel at this point, where there are large projects coming up? What advice would you give them?
I would say both locations have their own challenges and both locations have their own advantages. Keeping investors in mind, we would say that the kind of market currently it is, one needs to look at supply and demand, the basic factors of appreciation. When there is more supply, the appreciation is challenging. Considering this aspect, Gorbandar Road is one straight road which connects the other part of Mumbai from Thane. There is limited land. We are seeing that land getting saturated at this point of time. Maybe 5-10 years down the road, the land may not be there for new project development there. So we see that becomes a great opportunity in terms of supply-demand gap there. Coming to New Panvel, as you referred, rather than Navi Mumbai has great advantages in terms of supply-demand gaps. If you look at Vashi, there is no supply. If you look at Koparkhairane, there is no fresh supply. So those areas for investors look to be very, very attractive. When it comes to New Panvel, there's enough land for next 20-25 years. The challenge is, how will that land be consumed? How will that supply hit the market? How will the investors make money? So in our scheme of things, at this point of time, I would say investors would be much more safer with Gorbandar Road as investments versus New Panvel. New Panvel will be a 20-25 year investment horizon. Madhurima,
where do you stand on this debate?
Well, my views are very similar to Om's. We see both these locations have equal amount of opportunities, investment opportunities. So if you see the last 2-3 years also, both Navi Mumbai and Thane have seen a lot of quality development, coupled with a lot of infrastructure developments that are taking place. So it's all about which pocket and which stretch are you investing. So any micro market within these areas which is below the 10K, the 10,000 rupees per square feet mark would fetch an investor good returns.
If we then narrow down, since both of you all are talking about Thane, within Thane, where do you think we should focus our attention on if we're going in as investors at this point?
Options are quite a few in Thane as such, but I would say the best option is where there is no supply, where the supply is very constrained. So I guess at this point of time, Pokhran and Ghodbunder give you that advantage. I think then there's Kolshet, which is basically also is a upcoming area. I think these three pockets stand out to be the pockets for future, immediate future.
Madhurima, what's your recommendation for someone looking to invest in Thane right now?
Thane, again, I would strongly recommend Ghodbunder Road, especially the stretches which are between the 6,000 to or 8,000 rupees per square feet rates. Ghodbunder and Kolshet.
All right, so that's the recommendation coming in. If you're looking for a home in Thane or Navi Mumbai, here are some carefully hand-picked options from our panel of experts. Take a look. If you're looking for a home in Navi Mumbai or Thane, here are some options for you. In Thane, Raj Tattva by Rajesh Life Spaces, Oasis from the Rosa Group, Tropical Lagoon from the Soham Group, Imperia from the Dosti Group and Irene from Runwal. In Navi Mumbai, La Riviera by the Lakhani Builders, Akanksha from Arihant Superstructures and Brilliant from Garnet Constructions. Right, let's take some questions now. Ratnadeep has written in, he wants to buy a one-bedroom apartment in Navi Mumbai with what he tells us his stretched budget is 25 lakh rupees. He's shortlisted the Karanjhade area of Panvel. He wants to know what the future prospects are of that neighborhood. Oh.
I would say New Panvel has quite a few options in this budget range, what he's looking for. But I think he'll have to go outskirts of New Panvel, specifically keeping this in mind. There are quite a few projects which are from Arihant. There is a project from Godrej which is supposedly in launched. And there are quite a few options he can choose from. It's not that in this budget he will find difficulty in finding good lifestyle projects. It's a possibility that he can choose between the best developers there. There is a good possibility there.
All right. You can obviously write back to us if you have any more questions. Abhishek has also written in. He wants to buy an under-construction home of 750 square feet, perhaps a one-bedroom apartment in Thane. He shortlisted Bhumi Acres by the Bhumi Group in Thane. He wants to know what returns he can expect in a 6 to 7 year horizon. Oh, you want to take that?
I would say Thane would give an annual appreciation of 10 to 15% on a conservative basis going forward. I guess the matter is matter of time. We may see a faster appreciation also, but the project what he's chosen, he can go ahead with it.
Well, Amit has written in, he's an NRI based out of the UAE. He wants to buy a home in Pune as an investment. Now, he's narrowed down his choices to the megapolis Mystic in Hinjewadi, F Residencies in Kalyani Nagar, Life Republic in Hinjewadi, Langston and Beryl in Karadi. He's also shortlisted Undri and Kondwa as potential investment locations. He wants to know, out of all of these options, and he's picked so much, which one would be the best option in a 4 to 5 year horizon?
I think Hinjewadi is a good destination to invest in, especially it's driven by the ITS community, and most of the people working in and around this micro market like to rent out apartments which is in the vicinity. So from the rental perspective that he's typically looking at, Hinjewadi would fetch anywhere between around 16 to 17,000 rupees per month. So given his budget, one would be Hinjewadi. The second area which I would recommend is even today Kharadi, with respect to the type of development that's happening, the connectivity, the type of office spaces that have come up in and around that area.
All right. Om, a budget of 80 to 85 lakh rupees in Pune, that can afford you a fair amount in Pune. He doesn't have to stick to, the outskirts. What's the best option?
I would say Kalyani Nagar, what he's chosen is a very good project. He's chosen the right location. Considering the kind of supply constraints that area has, I guess that would be a long-term, very good investment, keeping that in mind. As rightly said Madhurima, Kharadi is other location he can look at. But I guess what will happen is, keeping in mind as an investor, he would like to see a good amount of appreciation, and Kalyani Nagar will offer him that.
He should also focus on rental returns when he's looking at Pune.
Absolutely.
Right?
I think Kalyani Nagar will also offer him good rental yield as well as good appreciation.
All right. So there you have it. Options are on your screen right now. If you have any more questions, feel free to write back to us. We'll take a very quick break. When we come back, we will talk about these 80-20, 70-30 schemes that are being offered by builders right now. We'll find out if there's a catch there and if you should worry about it. Don't go anywhere. Welcome back. You're watching the Property Guide on ET Now. Thank you for staying with us. We're talking about buying property in India. Right, now we know the realty market has been slowing down for the last year or so, and now we've seen schemes like the 80-20, 70-30 scheme pop up to attract your attention. Now what we're trying to find out today is whether as an end user you should opt for these schemes, or is there a catch in it? Now before I ask both of my experts what we should do when offered these schemes, let's take a look at how these schemes first work. With the slowdown in the real estate sector, developers are resorting to schemes like the 80-20 to boost sales. So how does this scheme actually work? Well, based on your income and creditworthiness, a bank will sanction a loan for you for the shortlisted project. You will have to pay 20% of the apartment cost at the time of booking. The remaining 80% is disbursed to the developer by the bank depending on the pace of construction. Any interest or pre-EMI that has to be paid in that period between the sanctioning of the loan and possession of the home is borne by the developer. Now the devil is in the details. A lot of times the scheme is only available with a particular bank that has entered into a marketing tie-up with the developer. Now this might not be the lender of your choice. Apart from this, the agreement may have clauses that limit the builder's liability in case of default. Also, it may link the payment period to a specific time like 2 years and not actual possession. So like we always say, read your documents carefully. Alright, that was possession-linked schemes. Oh, from the last we heard of the RBI categorically asked banks, it was not a regulation, but they strongly advised banks against participating in these schemes. How are these still happening in the market, and how does the RBI not crack down on it yet?
Well, earlier the whole option was that bank was funding on behalf of the customer. The customer was getting into a tripartite agreement wherein the customer was signing an agreement which was with the developer for buying the property, and the second agreement he was signing with a bank where he was authorizing the bank to release the complete amount to the developer so that basically can be funded, and the burden was on the buyer's side. Developer was getting the funds from the bank and he was sustaining the construction flow. RBI came down and they said we can't do this. So the tripartite agreement was out of the way now.
Right.
So now the developer is taking the risk on himself. Developer is saying, I will fund, you just book the amount by giving me 20%, 80% is I am going to fund it on my own. So developer is not going to a bank on behalf of a buyer and taking the money. The current model is a true construction linked plan, possession linked plan, wherein the developer is taking the complete liability. Developer is saying that you just come in as a buyer, so you are like in a stock market, you are like buying an option. You're giving 20% and you are going to ride the whole upside. So by this, he's actually, as a buyer right now, I actually only have to part with 20% of or 30% of the money, and I don't have to pay anything until possession. Absolutely. What happens if the builder delays? If the builder delays, your risk is only 20% of the money or 30% of the money what you paid. The good thing is you're not having any other liability on yourself. Okay. By the way, I want to ask you this. Now, when we see a builder start off with a big banner or a big hoarding, and then slowly add a little portion to it that says it's only 80-20, then break it up a little further saying 70-20-10 or whatever it is, it generally sends out the notion that this builder is growing more and more desperate. Is it fair to assume that he's doing it to raise just 20% from me, which means that he doesn't have enough money to complete construction, which means I should, in the back of my head as a consumer, be slightly worried that he might not be able to finish the project?
Not in all cases. So if you see, these schemes have always been very lucrative to end users. So if I have to keep the risk totally aside, it's a win-win situation for both the developer as well as the consumer. As an end user, I get that cushioning period till either possession or the stipulated time period of say 2 years before my EMI burden begins. So end users always prefer this to delay the EMI burden. So it's a win-win for both situations. It's not always
I don't know. I have trouble believing that. Is there a catch? Tell me if there's a catch.
I would say, I think, it's frankly, moment you see the 2080 being added by the developer, it's not a desperate move. Current scenario is, this has become, every buyer is going and checking with the developer, are you offering 2080? Okay. So it is, if developer is not offering 2080, then buyers are going to the next project. So it's a matter of, moment you say there is some catch to it, the catch to this at this point of time is, it has become a feature of a project. Okay. It's not an option, it has become a feature of a project. Okay, so for both of you, I want this advice now. If there are viewers who are watching, who are going to go out and actually sign on these projects over the next few months or so,
What should they keep in mind? Should they get lawyers to look through the contracts? Have those contracts been standardized across all developers in any way? What sort of precautions do I need to take? Because it's not the MOFA contract. It's going to be slightly different. What do I have to do?
It's an option contract. Frankly, one needs to basically 100%. Every such contract any buyer is signing should be run through a legal firm. Don't save that money which you will pay to a legal firm, because end of the day it's your life's investment. Second part of this is ensure that there is no differential pricing where you are taking that is beyond your logic. So it should be, if they are taking a little more price risk in terms of opting for this 2080, the developer may be charging you a little extra. If it's worthwhile, if it's not hitting your P&L too much.
How do we know if it's worthwhile? How much more? I mean, would he just pass on the interest for that amount into
If
work it into the
If it
cost?
is little discounted interest, it's worthwhile.
Okay, Madhurima, what's your advice?
I think it's pretty similar to homes. So there's nothing more to add. He said it all.
Okay, all right. So this is really interesting. When you look at that contract, make sure you do a little bit of a calculation. If you were to actually raise the home loan and pay it construction-linked visa, we take the 80-20, try and work out what the final outgo is going to be from your end, and then make sure that he's not passing on a lot of that cost to you and it still makes sense for you as a customer. Let's take a few questions. Well, Sunil has written in, he wants to buy an apartment in Bangalore with a budget of 17 lakh rupees. He's shortlisted the Akriti Green Woods in Jigani and he wants to know what the prospects are. 17 lakh rupees, is that enough to buy a home in Bangalore?
The area that he's looking at, this micro market, especially has projects which are targeting the budget segment. So all developments which are coming in Jigni and the surrounding areas cater to your electronic city. That is the ITITA segment. And secondly, you have the Jigni Bomasandra industrial area, so that belt. So given that and his prospect, I would say under the current market scenario, he should look at developments which are by a little more prominent developers offering lifestyle amenities. One, with respect to the appreciation that he'll see. And secondly, obviously, the exit in the later years would be far more easier.
But would they fit into his budget of 17
It would
lakh?
fit in. In fact, he should also look at options which are slightly off Hosur Road. They are projects in this, targets this budget, which are again better in terms of location and by prominent developers.
You actually have a good budget, then you can get back in touch with us if you have any more questions. We have a question from Hyderabad. Abhinav has written in. He wants to buy a 2-bedroom apartment in high-tech city in Hyderabad with a budget of 50 lakh rupees. Now, he shortlisted a few options. Rainbow Vistas by Cyber City Developers, SMR Vinay Fountainhead by SMR Holdings. He wants to know which of the two is a better option and is this the right time to invest in Hyderabad? Would you rather have him wait till August? Oh?
But I would say both the projects what he's chosen with the budget what he is looking for, options are very, very limited in high-tech city currently. Considering the size of the apartment, considering the budget, considering the price, we continue to believe that Hyderabad has already moved up 7 to 8% in last 2-3 months, and we believe this will actually give further up move post-elections, and we don't see any reason why you should wait till August. Look at the best option there and just go and broke your deal.
Does it make sense for him to maybe also look at a Gachibowli, Madhapur type of areas? Will he be able to get something in his budget there?
Certainly. I think he will get quite more options there in specific terms, and as you mentioned, Gachibowli. He will get quite more options there. But I guess in Hyderabad, what has happened in last 1.5 years is not too many new launches which have happened. So the options are quite limited. There's not a lot more buying happening currently. A lot more people are actually going and closing deals considering the Telangana issue has been resolved. Already prices have started inching up. So we believe it's the right time. And options are limited.
Time for us to take a very quick break. Thank you so much, Om and Madhurima, for joining us on the show. When we come back, we'll bring in our lawyer. We'll talk about important documents your builder should have before you move in. Don't go anywhere. Welcome back. You're watching the Property Guide in ET Now. Thank you for staying with us. It's time for our legal segment. And to help us answer this segment, Advocate Hemang Jariwala joins us now. Hemang, thank you so much for joining us.
Thank you.
Our first question comes in from Abhishek. Now, he tells us he bought an apartment in Bhivani Exotica from the Bhivani Group in Kolkata. Now, the sale of the agreement does not specify how the construction of 35 flats is being divided across the land that the builder has. And the builder hasn't given him any of the other documents. Now, he wants to know what documents he should ask for this developer to give him right now. Hemang?
In this case, basically there are three issues. The first is what is the share of each flat owner in the land and the building. Now that very much depends upon what are the clauses of an agreement, whether the clause of an agreement specifies that a company would be formed or a society would be formed or a condominium would be formed. If the condominium is formed, then all the flat owners who are residing in that building would have an undivided equal share in the land and the building. If a society is formed, then the owner of the land and the building would be the society, and the flat owners would, as per the Cooperative Act, be the occupant of the said flats. And if a company is formed, then the shareholders would be the owners of the land and the building along with the company. First and foremost, it is very important for the flat purchaser to see the land, whether the land is freehold or the land is leasehold. Second important document is the title certificate issued by a solicitor or a reputed advocate. Third is the encumbrance certificate, which would clearly show whether there is any encumbrance, mortgage, lien on the said land, whether amounts have been taken, who has taken the amount, what is the quantity. The next comes is the approved and sanctioned plan, IOD, commencement certificate, and most important is the draft of the agreement which a flat purchaser is going to execute. Thereafter, it is also very important to understand the list of amenities and facilities which the builder is going to give you in the said project, along with the list of all the other taxes and other expenses which the flat purchaser will have to pay once he takes possession of the same. So all these documents should be called and should be vetted by a professional advocate who deals in property matters for you.
Our next question comes in from Avinash Gopalakrishnan. Now, he tells us he bought a home in February 2010 in Serunti by Vasavi developers in Chennai. Now, he says he still hasn't received possession of the flat, and out of the 4 blocks that the builder has built, they're not completed, block 1 and 4. He says only 80% of the work has been completed in the remaining 2 blocks. The apartments don't have basic amenities like lift and water supply, among others. He's already paid 3 lakh rupees towards the apartment, and he's very worried about his money right now. What legal options does he have?
First and foremost, the flat purchaser should send a legal notice and should clearly state that the possession was promised in a particular month, particular year, and as to why the possession has been not given in time. Along with the possession, why the completion certificates and all are not coming into place. The very fact that the project is incomplete, that is the reason why there is a delay. The flat purchaser should file a consumer complaint under the Consumer Protection Act 1986 and make 2 specific prayers. The first prayer is that he should be compensated for the delay in possession on a day-to-day, monthly basis. Secondly, he should pray that the builder shall give a complete schedule as to what is he going to complete at what point in time, and only upon such completion of work, the balance amount would be paid by the flat purchaser, who would be the complainant in this case.
All right, Hemang, thank you so much for answering our question. Now, if you have a problem with legal aspects of buying property or, in fact, tax aspects of buying property, write to us. Email ID is at the bottom of your screen. You can reach me on Twitter. It will be my pleasure to hear from you. Thanks so much for watching.